Hi, guys, and welcome to the 14th episode of WTW, the weekly trading wrap up, where we talk about the week in markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. As usual, we start with the S&P 500, the market, and this week was a shortened week because Monday we had off, so we only had 4 days of trading. This was starting here, denoted by the downward facing arrow. Tuesday, Wednesday, Thursday, and then Big Friday. Big red candle Friday. This is the big news of the week. Okay. Um, let's just talk about the technicals right off the bat. You can see that even after Friday, the technical picture, there's still a consolidation pattern happening, and we still have a series of higher lows and higher highs. Okay, this was a Tuesday. On Wednesday, we made new highs and then gave it back up on Friday. But on Friday, it didn't violate any of the lows. So it's still technically a bullish chart. Um, but still consolidating. Okay, so let's just get the technicals out of the way. Um, this week was options expiry week. It's called OpX for short. So usually, like on Tuesday, Wednesday, and Thursday, it was playing out exactly like normal, quote unquote, because during options expiry weeks, the market makers try to keep it within a certain range. Okay, except on Friday where it just tanked. I thought Friday was going to be a day where they pinned it around these levels and it was going to be an extremely boring week, okay? And it was an extremely boring week heading into it. But the underlying structure of the week, you can see, was fairly bearish because even though the S&P 500 was doing nothing on Tuesday, Wednesday, and Thursday, there was a lot of selling going on underneath, okay? Was that meaningful? I don't know. We'll have to see, okay? So let's just start talking about the week, and let's begin on Tuesday, the 18th of February. Okay, it's a very light week, like we said. Usually, no macro for this week except on Thursday with some one relevant point, and then a slew of macro data on Friday, which could have tipped the point. Okay, tipped the scales, I should say. But on Tuesday, nothing big. Okay, we're coming out of Friday, the weekend, and we heard that there might be some peace talks in Ukraine and Russia, and that helps the bullish narrative. So the market went up, but it was up very slightly. Okay, and we also had the big news coming out of the week was gold coming out of the weekend. Okay, um, of course, gold trades on Monday, even though the markets were off. But on Tuesday, big move up. Okay, why? Excuse me. Let's mark Tuesday here. Okay, this was Tuesday's move because there's talk that gold lease rates are exploding, and that a lot of gold is moving out of the London Mercantile Exchange and the London bank vaults into the U.S. Okay, somebody in the U.S. is apparently asking for a lot of gold delivery. There's rumors around gold this week like crazy. Okay, uh, the U.S. is going to audit its gold holdings. They might not have enough, so they're shipping it from London to here. I mean, you get all these crazy rumors. Okay, so gold on Tuesday made highs or right at the recent highs. Well, closed at highs, okay, because those were like highs, but the close was higher than the previous close. So it made new highs on Tuesday, okay, and then it consolidated for the rest of the week, which is very positive because it sort of recycled, not really, but sort of recycled the technicals, which is the relative strength index here, into not super overbought, but I guess overbought. I don't really draw a lot of meaning into these overbought conditions, but it just alleviated the pressure of just one day spike, okay, leaving more room to the upside potentially. Okay, still very bullish. Look, this is extremely bullish. You don't look at long term. You don't want to go against this right now. Okay, so that's the rumors on gold, and that's what happened on Monday coming in to the week. That was Monday, but the first big trading week on Tuesday saw an even more continuation of that move. Okay, so gold is very positive on this news. It's very speculative in my opinion. As you know, I sold half as it was approaching the 3,000 level. Currently we're at 29,035, 36. It's moving because it's still trading today. I am recording this, of course, on a Friday after the market close, so gold is still active. So usually when you hear these rumors about gold disappearing or there's not enough gold, the lease rates are exploded, whatever, usually it's the sign of the top, okay? But that's why I sold half, and top could be a temporary top. I don't think gold is going to crash all the way back down to like 2,700, but it might consolidate or correct a bit, okay? Because we're coming to the magic $3,000 level, okay? So that is my view on gold, and that's what happened on Monday when it comes to gold and the markets, okay? Tuesday. Let's move on to Tuesday on the S&P 500 was this day. Another positive, went into new highs and closed into new highs, the market did. Okay, what kind of macro did we have? Well, we had building permits. Let's see what the building permits are. They came in at 1.48 million. Okay, this is 1.48 thousand, so it's 1.48 million versus 1.48. Versus 1.46 million. So it's within this range. Building permits within this range. Well, okay, so we can't go into the max feature anymore on trading economics because it's only for subscribers, but it's pretty stupid because it's free information. You can just go, which I already lined it up. You can just go to the economic database of the Federal Reserve and you'll get the full maximum picture, okay? However, it doesn't update right away. Trading economics updates it immediately as it happens. So this might take some time, but if you can just see the most recent move, it's 1.483 million, okay, for January. This one did update actually. So again, within the range, it's not catastrophic. They're not going down. As you know, let's go for the 10-year average. Building permits are going down before there's a recession. If you go to the max, you can see it starts dipping before recessions. Okay, here there's no dip, so we're pretty good in terms of building permits. And that came out on Wednesday, and it is a relevant figure. This is the one we keep looking at on our macro data sheet, which, let's just bring it up here, the macro backdrop. Oops, I don't really have the full picture here. Anyways, one of the things that we look at is the building permits in our macro backdrop. Again, what happened on Wednesday is that Trump threatens with 25% tariffs again. As you can see, did that make any dent? No. Okay, it went nothing. So now we're getting to the point where we were saying before that all this tariff talk is going to have tremendous volatility in the beginning, and then it's going to have less and less as time goes on, and people start getting used to his rhetoric and his tactics, his meaning Trump's. So this kind of volatility around tariffs is probably going to disappear going forward unless there's a big move that happens, okay? Unless a tariff war breaks out, which I don't see happening, okay? So the tariff talk is going to get more and more muted over time as expected, okay? And the Fed minutes came out on Wednesday, which was supposed to be something that was devastating, but nothing really big came out except one little note that should be mentioned is that the Fed members believe their balance sheet runoff should be slowed down, okay? Meaning that they're not gonna let their balance sheet run off, which is sort of a quiet form of QT. So if you're not going to have QT, I guess it's positive for markets. I mean, you can look at it that way, but it's a very, very small effect. But again, it's positive. So that's why I guess the market went up and general momentum of market buyers coming in, because there was no other data that suggests any kind of negative on Wednesday. Okay. Another thing of note on Wednesday is that MicroStrategy announced, where is Wednesday here? This is Wednesday, this candle right here. Let's mark it. Okay. They announced another financing. They $2 billion worth of convertible notes are going to be issued, due in 2030, and the proceeds will be used to buy Bitcoin. So MicroStrategy again is repeating that flywheel system where it issues equity, in this case a preferred, a convertible share, convertible, not a preferred. It's a hybrid between let's say a debt security and an equity security. Okay, so it's a preferred share. It ranks below debt, senior debt. So this to me brings me to Bitcoin. Okay, so this is Bitcoin on Wednesday. Okay, it went up on this news. Okay, and as you can see, Bitcoin was fairly supportive the whole week except on Friday when it got hit. Okay, but if you look at all the pessimism that is going around, okay, Bitcoin is holding up. Okay, so you have a lot of pessimism, Bitcoin holding up, except on Friday where it tanked, but still maintain this very constructive consolidation pattern, still holding support. As you can see, every time it gets tested here, it gets rejected. Okay, so, and despite a very bad week on Friday, a very bad day on Friday on the S&P 500, it still is maintaining a bullish pattern. So I've entered some longs in Bitcoin using various vehicles, one of which is buying MicroStrategy via call options, a call spread, and buying Bitcoin directly, okay, through ETFs. The one that I chose was the Fidelity Wise Origin Bitcoin Fund, and I bought it on Wednesday around here. Okay, it gave back the gains. However, it's still, like we said, Bitcoin. It's the same chart as Bitcoin. So, as we said, I'm still bullish Bitcoin because the pessimism is completely out there. I mean, you keep hearing stories of exchanges fraud, Ether getting hit. What was it? On Friday, there's some crypto news that came out that Bybit Exchange confirms that it's been hacked for $1.5 billion in Ether and Mega Ether, I guess. But the CEO played it down. So you have all these bad news coming out for Bitcoin, and yet it looked very good except Friday, where it's still okay. You're still going to have these, but because generally the market goes down, Bitcoin goes down, generally, not always. But I'm still bullish because given the very negative sentiment, it's still holding a very good pattern. After a breakout, it's flagging, it's consolidating. And I think it's consolidating for a next move up. And this consolidation pattern has brought everything back to neutral. Okay, it's not overbought or whatever. Like here, it was making new highs while this was making new lows. So that's like negative divergence. Here, it already factored that out, chopped around at the highs, and I think it's ready to make a move up, okay? Despite what happened on Friday. Okay. So let's go back to SPY, and that's it for Wednesday. So let's go to Thursday. Thursday was this candle here, a down day, but it came back. As expected, Thursday was just another light macro day. I was expecting the whole week to be a nothing burger, and then Friday surprised me. Okay, but Thursday confirmed everything of a nothing burger week. OPEX, everything's going to be pinned around these levels. Okay, we did get initial claims. As always, we look at initial claims. So where is initial claims? Right here. So the initial claims came out, 219,000. Nothing within the range. Nothing crazy. Not spiking up. All within range. And like I said, 219,000 versus 214 previous. It's nothing. Okay, so in that macro out of the way. So Thursday did nothing as expected. Okay, the two other pieces of news that came out on Thursday that to me are worthy of note is that PLTR got hit. Okay, because of on Thursday, you can see this is Wednesday. It took a big hit because it was announced on Wednesday. But on Thursday, the down move kept going. Why? because the Pentagon announced that it's going to cut some spending, and that people think that's going to affect their defense spending. Of course, it'll affect Palantir because Palantir is heavy into defense spending and has heavy connection with Mike Stock's military-industrial complex. The military-industrial complex is strong with Palantir. The military-industrial complex force is strong with Palantir, I should say. So when that takes a hit, and this is a meme darling, a retail darling stock. Okay, retail loves this stock. So when it gets hit, it's not good. You want to see retail doing well. Okay, so Palantir getting hit is something of note, but people can say that, look, it just breaking, alleviating the overbought conditions, ready for the next move up. That's also good. Okay, so it's just a mental note of what happened with Palantir this week and how it could affect retail meme buying going forward. Okay? But for me, the bigger news is Chinese market. Okay, it's not news, but I should say action. And as we noted last week, I got out of my BABA calls because, well, they realized their maximum profit. So the maximum profit for me on BABA was realized when it went above 110. So I bought it back here. I bought back my BABA call spread. I had an 87.5 110 call spread. It realized most of the gain before expiring on Friday. So it's irrelevant whether, for me personally, for my trade, it's irrelevant that it went higher because I would have not made extra money. Okay, had I not had the 110 call as a short, as a sell, my 87.5 call would have been an amazingly profitable trade. Okay, but you never know that's going to happen. You can't predict parabolic moves. Okay, you just, at the time when I got into it was around here, December. So you don't expect it's going to do this. Okay, so you're grateful for getting the profits and then you go away. However, this is great because this, to me, it's been a week or two of this strong movement in BABA and in the Chinese market as a whole that I'm looking to re-enter. Okay, this could be good. And this move on BABA happened on earnings, at good earnings, okay, on Thursday in the morning. So it beat on the bottom line, and on the top line was pretty flat. But the market liked that, okay? And it kept going higher because of that. And we still don't have the news of Chinese stimulus yet, which I think is going to happen. So that's why I'm liking the Chinese stocks, and I'm looking to re-enter, although I'm going to be patient, okay? I have to see. And by the way, if you look at the chart, we have a long way to go before BABA hits the high, okay? It's not going to go there in a straight line. Plenty of room to play this Chinese move over time, assuming it's real, and it looks like it's going to be real. Hopefully the news that I'm expecting is that, they're probably not going to do as high a stimulus as expected, so it tanks again and then consolidates around this previous support zone. I think if it ever gets down there based on that piece of news of like lighter than expected stimulus, and it starts consolidating like it did here or here, then I'll probably buy back in. Okay, that's my plan going forward for BABA. So that is what happened on Thursday. So let's go to the big event of the week. Back to SPY, Thursday, and now Friday. Okay, Friday was the devastating day. It started off okay. It opened up like the day was doing pretty well. Like if you look at it, let's go back to the 15-minute chart. You can see on Friday, it's here. Okay, where exactly? Let's see here. Friday here. Friday night here. Okay, so it was just down a bit. Okay. By the time, 9:30, 10 o'clock hit, this was 9:30. This was 9:30, and then 10 o'clock came around, which was around here, and then tanked all day. Okay. So it was holding up for a while until 10 o'clock, and then it got destroyed. So let's go back to the daily chart and see. Destroyed and finished at lows, okay? So what came out at 10 o'clock? We got the S&P Global Composite PMIs, okay? We look at the the PMIs, but not this. We look at PMIs, we look at manufacturing PMI, but we look at the ISM, the Institute of Supply Management, okay, PMI figures. However, this is another company. It's called S&P Global. Okay, S&P Global comes out with their composite PMI, and it came out this Friday. So their composite PMI came out at 50.4 versus 52.7 previously, so it went down. Okay, but still expanding. Okay, their manufacturing PMI was up. It went 51.6 versus 51.5 previously, which means it's still expanding. Okay, however, the big news of the day is that their services PMI fell below 50 for the first time in a long time. It's at 49.7 versus 52.9 previously. That's a big drop for services. And if the economy in the U.S. is like 60, 70% services. So when services are looking that they're contracting for the first time, there's a problem. Okay, so that's what I think happened. We don't really know why. There's multiple reasons why this fell, but given the timing, I think maybe that was it. But for the S&P to drop like 2%, 1.7% on the day, on that is, I don't know. Okay, I mean, we also had some other macro news that we look at, which is the University of Michigan. Consumer sentiment also tanked. It was 64. That's pretty low. We can't go to the max. You can see that that's not that. Let's go to the Fred database and see the University of Michigan. Let's go like 10 years. Okay, let's go max. Okay. I mean, lows, it's going down. It can go down to 50, which is extreme low. But however, okay, it's 71. It won't show the 60. The 60 is around here, okay, because it didn't update it yet, which is down. It's not good, okay. However, 60 is not 50, and you're close to lows here, okay. So a bad consumer sentiment print plus a services PMI hit, contracting for the first time in a long time. I guess the market didn't like that, okay. However, like we said, this is OPEX, option expiry. You have very weird stuff happening. Okay, this generally doesn't happen. I thought it was going to be pinned, but there was probably a lot of calls that needed to be destroyed. Okay, so you have multiple reasons, okay, and multiple justifications for this drop. We don't know what it is. It could just be OPEX action, killing the calls before going up again, which is what I suspect. Because for me, like, oh, by the way, there was another thing I should mention, because it's not just the PMI, the services PMI and the consumer sentiment that made this drop. We also had rumors of another coronavirus that is deadly that's being discovered in China. Okay, so roll the dice. Which one do you think it is? We don't know. It's just, this market is looking for a justification for this drop. Okay, people are searching. We're creatures that always trying to look at and find out patterns. Okay, we are pattern recognition machines, and we're trying to like draw some kind of reasoning as to why this happened. Personally, I don't think it's the PMIs. I mean, because you can easily get a drop below 50 before it comes back up again. Like if you look at the services PMI, let's look at it here, the ISM. We'll look at the ISM here. We can't go max, okay? 10-year, okay. You see, it's very rare that it goes below 50, okay? Here we have 41 because of the coronavirus thing, but you would have, look, it goes to 49.2 occasionally and then goes back up again. Here it can go to 50, here it drops to 49.2 and then it goes back up again, okay? You have months, 1 month anomalies. And look, from 23 December onwards, we had a bull market, even though it dropped to 49.2 in June of 2024 and in April of 2024. Yet in 2024 was a bull market, okay? So this could be an anomaly of a one-day drop, okay? Before the next month going up again, okay? So that PMI figure that freaked out the market, I guess if that's the reason why that happened, I think it's just unloading of calls have to expire. Worthless because there was too many call buyers, in my opinion. Okay, the only way to confirm this is to wait for next week. Okay, next week if it opens low and goes up higher green, like it opens low and goes green again, that's bullish because I think the rest of the week you're going to see a recovery back to highs. if that's the case, okay? And given this, you see that I like to look at the fear and greed index. We dropped all the way to fear. Okay, so how much lower can it go before extreme fear? Extreme fear on what? We're literally 2% off the market highs, and we're at deep in fear. It's just, to me, it makes no sense. And still, technically, like we mentioned in the beginning, the picture isn't broken. Even if it goes down here, it's not broken. Even if it goes here, it's not broken. It's broken the recent uptrend, but it's still the major consolidation point here. We're still consolidating. Still bullish, okay, at this point. However, this Friday's candle needs to be resolved next week. Okay, that's my opinion. I think it will. I think this could be OPEX action killing the calls, but I don't know. I can only confirm this next week. Okay, I just have my suspicions. So action-packed week, all concentrated on a Friday, when it should have been an OPEX quiet pin type week. Okay, so the markets will throw things at you that you never expect. I certainly didn't expect this Friday to go this crazy. Consistent selling, okay? Maybe a little bit of buying, but consistent selling on a Friday, very, very strange. OPEX, weird things happen. Let's see if it's really OPEX or if it's something more sinister going forward. I suspect it's not. So having said that, I'm still bullish.